Trader, yes, based on the video we just released, you are going to construct the two together. You are going to look at the picture. This is the candle I putted an arrow. For closing for this week is what I call CRT candle formation. That is candle ring theory. That is the meaning. And as for me, I do use 4 hours to spot it. I do use 4 hours for my own. Remember, this is a bullish market. I said in the morning that whenever there is a buyer, there must be a seller. That is the law. And you don't use retracement, except if you want to scalp. If you are going against the trend market, you see trending, you may likely lose money. As you can see, based on this one now, this is 4 hours on AUD USD. Now, if you want to use CRT, as I said, remember, this is the previous candle low and the recent candle low. You see that the low of this recent candle is lower to what? To the low of previous candle. That is the formation. That is the candle formation pattern you must be looking for. Now let's go to 1 hour. This is what we are having in 1 hour, because I said that level of CRT is the level of demand zone, and you are expecting the market to retrace to that level before you will now be looking for your entry. This is 1 hour, because I told you that you must go, to what? To small time frame of your choice. Let's go 30 minutes. This is what we have is 30 minutes. Are you getting me now? Let's go to 15 minutes. This is what we are having in 15 minutes. As you can see, this is what we are having in 15 minutes. We are expecting the market to what? To bullish. Let's go to 5 minutes. 5 minutes. This is what we are having in 5 minutes. Are you getting me now? This is what? Inverted head and shoulder pattern. But remember, the zone has not been tested. That is 70, 11, 15. Now, that is for what? AUD, USD. Let's go to another one. Euro, AUD. Euro, AUD. Let's go to 4 hours. 4 hours. This is it. The same pattern. Can you see?
CRT
That is
strategy and
second
trading.
one. Let's go to GBP, USD. GBP, USD. I'm having it. Can you see? So, this one is almost definitely is going to fly high. We are targeting this base. That is it. That is what. This one now, you can enter this one. GBP, USD. You can place your trade. Bullish. Let's go to 15 minutes or 30 minutes. This is what we have in 30 minutes. It's already what? But the market will still come and test that zone. Sure, sir. Let's go to the last one. NZD, USD. 4 hours. This is it. The same pattern. CRT candle formation. Don't forget, that is the strategy. Even though you don't use any, what you call it, but yours is to be able to identify it. As you can see now, is what? We are expecting the market to come to the one level. If you zoom it, so we are expecting the market to come down to the one level before it will fly. That is the strategy we are having today as a takeaway for the week. Thank you. Good evening. Yes, welcome. As you can see, we are still continuing to analyze our market, our chart. So I told you earlier in the morning that Euro USD is bullish market, AUD USD is a bullish market, NZD USD is a bullish market, while GBP USD is a bullish market. But the strategy I want to teach you now, remember I told you earlier in the morning that even though the market is bullish, we are expecting a retracement. I just released, the posting of how successful the trading was based on what? On retracement market that will place the trade. But now the market is continuing the trend now, and the strategy I want to teach you now is what I call CRT. CRT, you are going to use CRT in higher time frame. You must use higher time frame to tell your CRT, in the sense that because if once you identify your CRT in higher time frame, as for me, I do use 4 hour candle chart. So when you get your CRT in higher time frame like 4 hours, you now move to what? Small time frame, whether 30 minutes, 15 minutes, 5 minutes of your choice. But remember, the level of CRT will mark your what? Your demand zone. So in a small time frame, once the market retraces to that level, you are going to look for buy, because CRT in a, because if a previous low, a previous candle low, a previous candle week is what is lesser, you know, is lesser to recent candle week, because you are using recent candle week of a candle to compare it with the previous candle week. Let's assume I'm using 4 hours, the previous candle week and recent candle week. If the week of recent candle is lower to the week of recent candle, that is what the what CRT, candle range theory. That is the strategy you are using once you identify it as a bullish signal. Because if a candle, recent candle week low is lower to recent candle week candle, so you are going to be looking for what? For buy. Are you getting it now? And your TP is going to be the what? The high of the previous candle. Take note, if you are using CRT, candle range theory, the week of the recent candle must be lower to the week of the previous candle. And once you see it as a buy signal, your TP1 is going to be the high of the previous candle. Likewise, if you are selling with the strategy of CRT, the week of the previous candle, the week of the recent candle must be higher to that week of what? Of previous candle. And the body, the close of the recent candle must be within the range of the previous candle. And your TP1 must be the low of what? Of the previous candle. It's very simple. Even though you don't use chart, you don't use indicator, you don't use anything, based on price action. That is the strategy I want to give you for the week. Thank you.